Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, August 21st, 2009. Well, folks, we are seeing another little bit of an upside day on Wall Street with the overall indexes continuing there to the fourth day of rallying. We had that big down day on Monday. Since then, we've really had consecutive up days Tuesday, Wednesday, Thursday, and now Friday. The Dow is up about 140 points or 1.5%. The Nasdaq's up about 25 points or 1.27%, and the S&P 500 is higher by about 16.5 points or 1.66%. So solid up day again, folks. And remember, we had that big drop on Monday where we had basically 185 to 200 point down day on the Dow. The index has really tumbled there. And then since then, we've basically recovered and actually gone higher now. We have taken out 2 Fridays ago, we made a high at a 102.03 on the spiders. And again, you can go back and look at that in your charts, 102.03, which was right in line with this line. This was that high from 2 weeks ago on this Friday. Since then, folks, we've burst through that today. You can see right here, we tested the level, pulled back, tested again, closed, and then burst through it. And from that point, we made our ways up until that 102.50 level, 102.50. After that, we pushed through all the way up to into resistance near 103. Now, 103 actually is a key trend line. If you take a look at the charts here, folks, and go back, if you see this level from the lows, and again, this is the lows going back to that gap down on Tuesday, I believe that was Wednesday's gap down. If you connect that gap down to the high pivot right here and to this high right here, it continues right up to give us the exact high of the day today. So that's kind of interesting for those of you that are chart watchers and technical traders like we are here. You can actually pinpoint the highs on these charts very accurately. And you can see that very nice. So again, very interesting. There's another trend line I want you guys to pay attention to. Use that same low again and connect that low through this little pivot up. See how it kind of hovers right on this line right here? And bring that line directly up. And you can actually take it through right here and right to the lows of today. See that low, how it connects right to that low of the day on the first candle? And then look at this. The market is hovering right on top of that line right now. That's a second level to watch. So there's a bunch of levels that we're really close to watching here, showing us the key levels in this chart. A couple things to look at this. Today, guys, really the key catalyst was you had a neutral day in Asia last night. Asia's become more and more important for this overall market. You can see it very nicely. So Asia, very important. In addition, we had the Shanghai continue the bounce. We called for the bounce 2 nights ago. It bounced beautifully 5%. Then last night up another 1% or so on the overall markets. The Nikkei and Hang Seng were down, kind of making it a neutral day in Asia. But the big thing today was the dollar. The dollar got mutilated, absolutely crushed on the open. That caused the initial gap up and push early on. And then at 10 o'clock, what we saw was the existing home sales came out with some very solid gains. 7.2% gain in an existing home sales. In addition, Bernanke spoke at 10 o'clock, and his comments were exceedingly bullish, folks. And I'll tell you, they're making him the fall guy. I hope everyone's fully aware of what is going on here and what you can see. And what's basically going on is that Obama has not endorsed him for a second term yet. And the reason that has not happened yet is pure and simple because of the fact that they're waiting to see if he's going to be the fall guy. He's been pumping. If the economy doesn't recover, guess who's taking the blame? It's not Obama. Well, I mean, ultimately it's going to be Obama if it does happen that way, but at least in the first, what they're going to do is they're going to shift the blame over to Bernanke and say, oh, it's him. We're not going to reappoint him. Let's appoint Summers instead, or whoever's going to be. That's the fall guy, folks. So I hope everyone realizes the writing is on the wall there, so please understand that. Okay, having said that, going back to the chart, so those existing home sales, the economy pump by Bernanke really setting off a squeeze in this market where we took out that 102 level, which was the previous high. We went to 102.50 and then took that out, and now that 102.50 is becoming the support in this market, believe it or not. That 102.50 is a secondary support after this green trend line. This green trend line, now you're starting to hover up very quietly above that. If that breaks, and it probably will at some point, but we'll have to see. If that breaks to the downside, then you're going to look at 102.50 as the next spot on the downside. That will be excessive support. In addition, just I want to point this out. After you broke 102.50, you went to 103, then pulled back, and one candle dipped, touched 102.50. That was support. We called it out in the chat room, and then the markets actually rebounded off, headed back to the double top high or near the highs, pulled back, and have now traded sideways. One thing I want to point out, folks, is you're seeing, because of the light volume in this market, and by the way, today's options expiration, so you had a little extra volume this morning, again, on that home sales number, the existing home sales, but bottom line, folks, is that this market is in a period of light volume. We have most people taking vacations in the late portions of August with their families before the kids go back to school. You have to be aware of that. That's going to be a key player here. And what you're seeing is, and this happened yesterday, is that the biggest move comes at early in the day when there's volume, and we saw that yesterday from 9 o'clock to 10:30, and then the market just went sideways for the next portion of the day. Really, until 2:30, you went perfectly sideways. So then before you know it, you have that sideways action. Look at today. Big move early, and look what's happening. Sideways action now middle portion of the day. So you're really seeing this in a beautiful way happening over and over and over again, where you're seeing this sideways pattern middle of the day, anywhere from 10:30, 11 to basically 2 to 3 o'clock, sideways trading, and then the move comes later in the day when volume comes into the market. Whenever there's light volume like this, you always have an upside bias. We've always talked about that in the chat room, and these videos mentioned that you generally will. That continues to be the way the markets have been trading. Continued upside having been seen here, and you just want to continue to look for that. Now, at some point, this market, again, which remains insanely overbought, it's kind of a market on crack, if you ask me. It's kind of not aware of what it's doing, kind of just running marathons and so forth. Maybe speed's a better analysis there. But ultimately, you can see how the market is just continually pushing higher. There's not a lot of volume behind it. There's not a lot of, necessarily oomph behind it. But the bottom line is, in light volume, they're just going to push this market up endlessly, it does appear. So we'll continue to watch where this trades. And I do think next week is going to be an interesting week, folks. We are coming into an interesting pivot level in the markets, and I can't reveal more than just saying what's going to happen or the call basis, because that's for our premium guys to know. But we talked about some cycle work that we've been doing, signaling a certain type of move to a certain level in generalization here. And again, that's all I can say for now, unless you join the research center, of course. But bottom line is, you have to continue to watch. See the sideways trading here? That's what you expect middle of the day. That's exactly what we saw yesterday. Just note those similarities. In addition, we'll see if this green trend line breaks. If this green trend line breaks right here, which you can see it's being held above right by the 20 moving average right there as well. On the upside, you have resistance at 103 to 103.5. All right, 103.05 will be resistance all the way down to 103, 102.95, right in that range. If we start to break lower, which I do think could happen this afternoon, then you're going to actually see this green trend line break, and then the next spot to look for is that 102.50 level. That 102.50 level is going to be very important in this market, all right? If we happen to fall below that, it's only going to be because volume increases, and I want to make that clear, folks. I don't necessarily, unless we get an increase in volume, a flurry towards the end of the day, I really don't see this market breaking much below the 102.50 level because there's just no volume behind it. I do think you have a good chance of pulling back decently, but other than that, a major pullback unless we get volume. Now, again, if we get volume, this market will pull back. It's all about a volume-driven market. All right, the institutions continue to unload to the small guy. The mutual fund guy continues to put his money to work. That's just the nature of the beast right now. You have to understand what's going on. Does that mean it's near an end? Not necessarily. We have to continue to watch. We have some major levels, depending on where we close today, that we're going to have to analyze and see what that means. Do we confirm it on Monday? What are we going to do here? That's a lot of the key levels here. But one more time, guys, just watch the levels. These are your key levels on the chart. Please understand them and watch them. They're very, very important levels here to go by. All right? Again, on the upside, 103 approximately. Downside, green trend line, then 102.50. If you got through that, then you actually could look for a little bit of a drop all the way down to 102 even number on the downside. Market right now just hovering right on that green trend line and the 20 moving average. Looking at the 60-minute, folks, you can see the move we've had recently from this 98 level. Again, a major level. We called this 98 level for our premium subscribers as a perfect bottom in this market. We talked about some gap fill levels right here at 98 where it would be a major, major level. Sure enough, the market has done that beautifully. And then right off that gap fill, folks, the market raced up. And you might say, well, where was the gap fill? Well, let me see if I can show it to you quickly here. We'll go back. We have to go back a little ways here. There you go, right here. This is right where the market came down to, right here. See this gap fill? And this is what we had isolated for our premium guys on September 29th, showing the support levels of this gap fill. And if you just drag your mouse back, look at what we came into right here. Major support at gap fill. All right, now all of a sudden you have the 200 on the 60-minute inching up. The market has had a major extension move. It's actually consolidating here. That's the same pattern it had yesterday. Notice that. Please notice that. Bullish consolidation. Sideways all day long. What happens today? It reacts to the bullish way in a move up. All right, again, it's bullish consolidation. One of these times you'll fail, and I just want to point this out. You've had one move up and a pull back to double bottom, one move up, pull back, two moves up, pull back or sideways consolidation, three moves and sideways. Generally, you start to look for a little resistance up in this range, right around 102.50 to 103 should be. If you get through that, you could have a move to 103.70 or so on the charts on the 60-minute, but we'll analyze that again after we get through that, if we get through that level today on the upside. All right, folks, that's really all I want to discuss today. Just an encouragement to come join us. I am highlighting a small cap stock in the next few days. We'll be talking about that in the research center as well a little bit more. We've talked a little bit about it last night. We'll talk about it more. Also, some major pivot points coming in the charts. Very, very important stuff. All right, guys, be aware. Come join the research center. It includes everything listed under the research center. An insane amount of value there, including the also come join the intraday stock chat. They are separate services there. Have a wonderful, wonderful weekend, and we'll talk to you in the weekend video. Take care.